Palantir has once again impressed Wall Street with results that came in stronger than analysts had expected. The company reported a new round of quarterly earnings that showed a clear upward trend in both profit and revenue, largely driven by the growing influence of artificial intelligence in its product offerings and operations. Investors responded positively to the news, and the company's stock price rose by about 1% during extended trading hours. This increase may seem modest on the surface, but it highlights the continued investor confidence in Palantir's business model and its steady progress within the competitive technology sector. The latest earnings release demonstrated that Palantir continues to maintain strong momentum. The company delivered adjusted earnings per share of 21 cents, outperforming the 17 cents that analysts had predicted. Revenue reached $1,180 million, also exceeding the consensus estimate of $1,090 million. These results show that Palantir is not only managing to grow its top and bottom lines, but is doing so at a pace that consistently surpasses expectations. It reflects the strength of its artificial intelligence-driven analytics tools and the growing demand for its platforms among both commercial enterprises and government institutions. Looking ahead, Palantir provided an optimistic forecast for the next quarter, stating that it expects revenue of approximately $1,330 million. This outlook stands well above the $1,190 million that analysts had been expecting. The company's confidence in its forward guidance indicates that management believes the momentum behind its artificial intelligence initiatives will continue to deliver strong results. What is especially notable about this upbeat forecast is that it comes during a period when the United States government is experiencing a prolonged shutdown, now stretching into its second month. Such a shutdown can create uncertainty for government contractors that rely heavily on federal contracts. Despite that, Palantir's leadership appears confident that its existing deals and new opportunities will continue to generate substantial growth. In fact, revenue from Palantir's United States government division grew by an impressive 52% year over year, reaching $486 million during the quarter. This shows that even amid a challenging political and economic environment, the company's government business remains resilient. The consistent expansion in this segment highlights the trust and reliance government agencies place on Palantir's data analytics capabilities. These tools are often used in national defense, intelligence, and large-scale data management efforts, making Palantir a key player in the digital infrastructure that supports critical decision-making within the public sector. Over the years, Palantir has steadily solidified its role as a leading partner for military and government projects. The company has managed to outpace older, more traditional defense contractors and carve out a dominant position in government technology. Its reputation was further strengthened when it secured a contract worth up to $10 billion with the United States Army, one of the largest deals in its history. Such long-term agreements are vital because they not only provide a steady stream of revenue, but also reinforce the company's credibility as a dependable technology provider for some of the most sensitive and complex government missions. At the same time, Palantir's close relationship with government agencies has not been without controversy. The company has faced criticism regarding how its data analysis software is utilized by certain government departments, including the United States Immigration and Customs Enforcement. These debates often revolve around ethical concerns about surveillance and privacy. Despite these challenges, Palantir's leadership has maintained that its work focuses on building systems that strengthen security and enhance efficiency for its clients while operating within the bounds of the law. When examining the company's overall performance for the quarter, the numbers tell a clear story of rapid expansion. Total revenue surged by 63% compared to the $725,500,000 reported during the same period a year earlier. This marks the second consecutive quarter in which Palantir's total revenue surpassed the $1 billion mark, a major milestone that underscores the company's accelerating growth. Net income also demonstrated remarkable improvement, more than tripling to $475,600,000 or 18 cents per share. This compares to $143,500,000 or 6 cents per share from a year ago. This leap in profitability signals that Palantir's business model is becoming more efficient as it scales, allowing the company to generate higher earnings from its expanding revenue base. For the full year, Palantir now anticipates total sales of about $4,400 million, which is higher than Wall Street's earlier estimate of $4,170 million. The company also raised its forecast for free cash flow, expecting it to fall between $1,900 million and $2,100 million. Such a strong cash flow position provides Palantir with flexibility to continue investing in research, product innovation, and global expansion. It also enhances its ability to strengthen its balance sheet and potentially pursue strategic strategic partnerships or acquisitions that align with its long-term vision. Another area of exceptional progress for Palantir has been its United States commercial business. This segment saw revenue more than double to $397 million, showing that the company's technology is increasingly being adopted by private enterprises in addition to government clients. Even more striking, the total value of commercial contracts closed in the United States increased more than fourfold, reaching $1,310 million. This explosive growth demonstrates that private sector organizations are recognizing the immense value of Palantir's data-driven solutions, particularly in industries such as healthcare, logistics, finance, and manufacturing, where intelligent analytics can provide a decisive competitive edge. Recently, Palantir has also been expanding its network of partnerships with other leading technology firms. The company has announced new collaborations with Snowflake, Lumen, and Nvidia. These alliances are expected to further enhance the capabilities of Palantir's artificial intelligence and data platforms. For example, working with Nvidia allows Palantir to integrate advanced computing power into its systems, helping clients analyze complex datasets faster and more efficiently. Similarly, the partnership with Snowflake opens opportunities to streamline cloud data operations, while the alliance with Lumen helps improve connectivity and infrastructure performance. Retail investors have played a major role in driving Palantir's incredible stock price growth this year. The company's shares have soared by over 170% since the start of the year, pushing its total market capitalization beyond $490 billion. This surge has positioned Palantir among the most valuable technology companies in the world. Much of this enthusiasm can be traced back to growing retail investor participation in the stock market, where individuals have become increasingly interested in technology companies that promise long-term growth driven by artificial intelligence. However, some analysts have raised concerns about Palantir's valuation. The stock trades at a much higher multiple compared to other major technology firms that generate significantly more revenue. These analysts caution that while Palantir's growth prospects are strong, its current share price already reflects very high expectations. This creates a risk that any future slowdown in growth could lead to volatility in the stock's performance. Despite these concerns, Palantir's Chief Executive Officer Alex Karp has remained confident in the company's strategy and its investors. In a letter to shareholders, he addressed those who doubted the company's success. Karp stated that Palantir has enabled ordinary investors to achieve returns that were once only attainable for the most successful venture capital investors in Palo Alto. He credited this achievement to the company's authentic and meaningful growth, built on real technological innovation rather than speculation. In a detailed interview with CNBC's Morgan Brennan, he acknowledged that there is excessive excitement surrounding artificial intelligence at the moment and predicted that many companies claiming to use artificial intelligence will eventually struggle to survive. According to Karp, only the strongest companies with genuine technology and real results will continue to thrive, while those merely pretending to innovate will disappear quickly. His comments serve as a reminder that while artificial intelligence holds immense potential, success in this field depends on substance, not hype. Essentially, Palantir reported quarterly results that surpassed analyst expectations, with earnings per share of 21 cents and revenue of $1,180 million, both higher than anticipated. The company credited its success to strong demand for artificial intelligence solutions and a forecasted revenue of about $1,330 million for quarter 4, which is above Wall Street estimates. Despite a prolonged government shutdown, Palantir's United States government revenue grew 52% year over year to $486 million, while total revenue increased 63% to over $1 billion for the second consecutive quarter. Net income tripled to $475,600,000, and annual revenue is now expected to reach $4,400 million. The company's commercial business in the United States more than doubled to $397 million. Palantir's stock has surged over 170% this year, lifting its market capitalization beyond $490 billion, even as some analysts warn about its high valuation. Chief Executive Officer Alex Karp emphasized that Palantir's growth is authentic and substantial, noting that only companies with real artificial intelligence capabilities will endure in the long run. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.